We have to do this after the song for copyright reasons, believe it or not. Just give me a couple of seconds to do this here. Yes, we are on live stream, YouTube, wherever it is. Come on up, setting up live streaming. Okay, here we go. Here we go. We have to do this after the song. There we go. All right, we're all good there. And what do I have to do? Record. Hit the record button. I'm gonna get that. Find that one there too. Here we go. All right, we're all set to go. All systems go here, folks. Good evening and welcome to DayTradeSPY.com's Weekend Review, Intro to Trading. My name is Hugh, along with my beautiful dog Lucy. She's now gone, but anyway, she'll live on in infamy forever in our hearts. Yes, she will always be there. Anyway, today is Sunday, October the 5th, 2025. And folks, use the questions box. You'll find the little icon on your Zoom dashboard. Click on that. I'm the only one that sees that, so go ahead and ask whatever you want. Say whatever you want. Certainly try and get to some of your questions here a little bit later on. All right, just going to give you a couple of seconds here to read this. Disclaimer, legal disclaimer, keeps us out of jail. That's a good place to be. So, all right, I think you understand. You alone are responsible for all your own trading, and past performance does not guarantee future results. All right. If you want to go back and read that later, you can. Okay. All right, I'm going to ask you a question now, folks. Please answer the questions box. What is your options trading experience? What is your options trading experience? A, none, just curious. B, very limited knowledge, just enough to get me in trouble. Or intermediate, somewhere in the middle there. And then, of course, there's experience, got a good understanding of options. Please reply in the questions box. I want to kind of ask that question because if we have a lot of A's, and we'll stick around later at the end and give you an options primer. All right. And of course, there are no options, no A's. We'll just move on. All right. We're not going to waste your time with an options primer. So let me know in the questions box, what is your options trading? Okay, cool. All right, looking good. Good, good, good. Not too many new people here. All right. All right, let's move on, folks. Okay, so there I am, live in living color. And it is Sunday night. Beautiful day right here in the Western New York area. I'll tell you, here's what we're going to discuss here tonight. I hope it's nice where you are too. It's just a gorgeous fall so far. I can't complain. Absolutely nothing. Nothing to complain about. It's beautiful, beautiful weather. And did let's see, what did we do today? Not a whole lot. Did a little bike riding. Just kind of went out, hung out, went for dinner with my wife. Actually, we out about twice a day, three times a day sometimes. Don't cook very often. Anyway, here's what we're going to do today, folks. We're going to talk about last week, and we're going to give you an upcoming week in. We're going to talk about what's happening coming up this week, and we're also going to talk about a 2-minute tutorial, your next steps to success. Going to give you a Q&A session. Got a little contest here for you, folks. You don't have to know anything. It's just actually a kind of a chance game. I think you know how it is, those of you who've been here before. And we were going to do an options primer, but we'll probably pass on that. All right, probably pass on that. Maybe we'll do some. We'll see. We'll see. I think some of the A's might be rolling in here. We'll see. All right, that's kind of the plan for the day here. So, for those of you who don't know, my name is Hugh. Learned most of what I teach here from the trenches trading. My background is in internal audit and business, and I handed off a lot of my money to my financial advisor. He blew half of it out before I realized, hey, I got to learn how to do this myself. So I grabbed the reins and studied this stuff, and I figured I can lose the money just as easily. But I learned a few things along the way here and discovered some pretty cool strategies that work very well for me. Others noticed, of course, me to teach them how to do it. And we started this training, 16 years ago now, back in 2010, May of 2010. We're actually in our 17th year of doing this publicly. I've been trading before that, been doing very well, and I can't complain. The market's been very good to me. And I'm looking for short-term breakout trades. All right, that's what we do. We teach what we trade, trade what we teach. That's what it's all about. And I just want to remind you too, folks, don't forget, of course, Spy on the Market is our weekly newsletter. All right, this is a little commercial break here. This is a free newsletter goes out every Thursday. It's a brief 3-minute read, light, relevant, even entertaining. All you have to do to subscribe is go to our website, DayTradeSPY.com. And when a little pop-up comes up, leave us your email address and it'll get you on the mailing list. All right. Now, if you don't want to get on the mailing list, you can still go to the website, DayTradeSPY.com. And up at the top left where it says Spy in the Market or Newsletter, click on that and you'll get all of our old newsletters. All right. And they're usually updated about a day or two after they're released. This week's topic is going to be day trading goodwill. goodwill on day trading. All right. Also, too, just a reminder, don't forget, of course, if you're in the Florida area, coming up in a few days, October the 16th and 17th, my morning associate, John Johnson, and myself, we are going to be presenting on October the 16th and 17th. I understand we're going to be doing a live trading session there as well. That's going to be at the Money Show Orlando. The Orlando Money Show at the Omni Orlando Resort at Champions Gate. Don't miss it. We're going to be there 16th, 17th, and the 18th. All right. And that's not this weekend, I believe, not even the next weekend, but oh, wait a second. It is going to be the next weekend, is it? What's today? Today's the 5th. In 2 weeks' time. 2 weeks' time. All right. It's going to be a lot of fun down there. So do plan on coming down there. I know a lot of people fly in for that. And get to see some of our old people down there as well. So some of our clients down there. So looking forward to it. All right, let's take a look and see what happened here last week on the market. We'll quickly go over this. All right, this is what the chart looked like. All right, for SPY. We trade all SPY all the time. SPY, that is the stock that follows the top 500 stocks in the US. All right, the top 500 stocks. And it's a pretty good stock to follow because it there's a lot of good benefits for SPY, all right? It smoothens out any of the spikes. There isn't any one stock that's going to influence the entire sector. We're basically looking to see, well, where's the economy going? And that's kind of where we're going. So last Monday, what happened? Well, the indexes or indices, however you want to say that, closed higher. Even as SPY dropped during the day as funds moved from equities over to the safer havens like gold. That was ahead of the government shutdown that were threatening us. While between John and myself in the trading room, we did 6 trades, 6 wins, 1 loss. All right, 7 trades, 6 wins, 1 loss. On Tuesday, investors shrugged off government shutdown worries and hawkish signals from the feds, pushing SPY higher, driven by tech and financial sectors. We had 6 wins on Tuesday. On Wednesday, it was Big Pharma. They gained. Private sector payroll shrunk. SPY rose to new record highs after government shutdown. Apparently, the government or the traders, the investors like the government shutdown, obviously, because they're spending less money, right? Less money, and it's not inflationary at all, deflationary. Less money in the market, less money in the economy. That's counter to inflation, and therefore that's good for interest rates, and the market likes that. Well, we had 11 wins, no losses on what was that Wednesday? Thursday, more of the same. SPY rose for the fifth straight session, closing at another record high. Apparently enjoying the government shutdown. I think it was day number 2. 6 wins, no losses. And same on Friday. We had 6 wins, no losses, as SPY eked out another record close with high volatility. Interest rate cut expectations as the government shutdown entered its third day. So they're talking about there's a lot of Fed members speaking these days as well, I should tell you, and they're talking a lot about this. I think at one point it was 100% said that there's gonna be a 25 basis point rate cut at the end of this month as they release the numbers. And that was on Thursday. On Friday, I think it trimmed back down like 97%. Figured there's going to be a 25 basis point rate cut and a 2.5% said a no rate change. So something happened a little bit there. Somebody's going a little dovish on that one, sort of a little hawkish. Most of them are dovish, all right? So they're looking for interest rate cuts at the end of the year. That is actually good for the stock market, which is what's fueling the market. Let's take a look at the seasonals. All right, this is the seasonal chart, and as you can see, that blue line there, that is where SPY is now, and the red line is an average of the last 5 years' daily closing price. All right, and if we push this down into, focus in, zero in on this historically, you'll see that SPY rose about 1 point from last week, and it rose about 4 points with the week following. So why is this important? Well, if you follow the seasonals, well, you can expect some more bullish tendencies in SPY. Even though we're flirting with record highs every day, it looks like we're still probably aiming for record numbers in the days to come. Of course, the government shutdown is a big thing now. When they decide to open up the government and they come to some resolution in the House as far as the budget is concerned, that's going to have an effect. All right. Probably a negative effect on the market, but we'll see what happens. All right, let's move along and see what happened here last week. Government shutdowns began, halting non-essential operations. and delaying economic data releases. That's kind of where it hurt the market here because there's a lot of economic data that we just did not get, like unemployment claims and inflationary numbers, that sort of thing. Economic impact was limited during the shutdown, but current momentum was driven by a resilient consumer spending and artificial intelligence. Labor market softened, though layoffs remain limited outside the government sector. Market resilience also persists, led by AI, right? Investments and rate-sensitive sectors. And the shutdowns have historically had minimal long-term impact. They've usually been not too bad as far as markets are concerned. We're going to get into that in a little bit here. The economy is still growing, led by retail sales and artificial intelligence. That's the big thing. That's the big moving factor these days, AI. Here's a look at retail sales growth accelerating after ahead of government shutdowns. We see here that the resilient government sector here continues on into almost record numbers here, which, believe it or not, is actually inflationary, but market doesn't seem to care about that. It just continues on with record numbers. But here's the job seekers numbers, the job numbers here. Seekers now outnumber jobs available. That blue line is the number of unemployed, and that's actually greater than the job openings. So it looks like the labor market is softening up a little bit here as more people are seeking jobs than there are jobs available. Now, here's the Fed's journey back to neutral. They're looking for 2%, somewhere between 2% to 2.5%, although this says the neutral range is about 3.5% for inflation. CPI numbers are pushing up. Fed policy rate is coming down. They're actually aiming for a 2% inflation rate. And here is a graph of the S&P 500 performance during and after recent government shutdowns. This is kind of important. We're finding here that returning 6 months after the shutdown, we've had some pretty solid growth. All right, so the government shutdowns, we're seeing not too much activity, but as soon as the government comes back to work in the next 6 months, we're seeing some real growth in there. Okay, and over here, this is the Trump days in his last term. The government was shut down for 35 days. The next 6 months, back in 2018, we saw a 14% growth in the S&P 500. Actually, during the shutdown, we still saw a 10% growth. So it looked like, it looks like a lot of people are working that we don't really need in the government. So best government employee is no government employee according to the stock market, right? So that's kind of an interesting number there. So we kind of anticipate the same thing. By the way, historically, the stock market has seen its best quarter in the last quarter right now as we're getting into it. And of course, we're getting into what, October, November, December. There's going to be the Santa rally in December, so we expect the markets to continue on. Forecasts say that the S&P is probably going to continue on about 14-15% year to date at the end of this year. Currently, we're at 12.2%. We're well on the way. I'm guessing it'll probably get around 15-16%. This week, the S&P 500 rose 1.1%. Dow Jones, same thing, 1.1% to 9.9% year to date, but the Nasdaq rose 1.3%. That hit a high year to date of 18%. And that makes sense. The Nasdaq, that's got the heavier stocks, the tech stocks, and those are more highly leveraged. They're the ones that are overvalued. So whenever there's movement, you're going to see the movement first on the Nasdaq, right? And the tech stocks are going to lead the way in this too, especially the artificial intelligence stocks. All right, so that's kind of what happened there. And I expect to get another 1.2, 1.3% this coming week as well. This will probably be up around 14% by the end of next week, right? We'll see what happens. That's my prediction for what it's worth. That and a couple bucks will buy a coffee at Dunkin' Donuts. Anyway, let's see what's on tap for news for this week. Monday we have a no news day. Not much economic news. Same with Tuesday. And on Wednesday, we've got the Fed member meeting minutes that are going to be released. Now, nothing really new there. It's just that they're going to unpack the meeting that they had recently as to why they voted the way they did and what they're going to be talking about. So there's going to be a little bit of insight as to the Fed's thinking on Wednesday when it comes to the interest rate announcement that's coming up, by the way, at the end of this month. That's going to be in about 2, 3 weeks. Thursday, get a little more news here. We've got some unemployment claims. Fed Chair Powell will be speaking as well. Expect increased volatility around that time when Powell speaks. And on Friday, we've got average hourly earnings, non-farm employment change, unemployment rate, consumer sentiment, and inflation expectations from the University of Michigan. That's coming up on Friday. So a little more activity later on in the week. And as far as volatility is concerned, it's going to be low on Monday and Tuesday, medium on Wednesday, and high on Thursday and Friday. Of course, expect elevated volatility whenever President Trump speaks. And we never know when that's going to happen. Usually the same day, he lets us know when that's going to happen. All right. Lets us know when he's going to speak, and he talks about a variety of issues, but usually we find volatility increasing on those days. All right. All right. Let me take a drink here. Mm. Been speaking all day, and I just got to wet my throat. Excuse me. Very excited. Tomorrow we're back in trading in the trading room, and that's very exciting because I get bored on the weekends when there's nothing to do. You know what I mean? It's just dropped my phone. All right, as I monitor the my situation here. Got a 2 minute tutorial, folks. This is our regular 2 minute tutorial. Last week we didn't have it because we just got back from a beautiful 2 week holiday. Went to Europe, and as it turned out, didn't have a lot of time to prepare for it. But we're good. We're good this week. So today we're going to talk about when you're in sync with the market. When you're in sync with the market. When you're at one with the market, what happens? By this I mean you gotta pay attention. All right, get into the fundamentals, see what's going to drive the market for the day, check out the news, what happened, what's coming up, and then take a look at the technicals, really understand it. So by that I mean if you're in the trading room, you're going to get into our pre-market analysis when John and I discuss what's going on, what's driving the market, and then we look at the technical indicators, right? And I'm going to give you an example. Here's what happened here. As an example, this is just an example from Friday. Here's some opportunities using our system. Now, I did not obviously include the key indicators that we show you in our trading room. Okay, you have to subscribe to that, but this is what I'm going to show you here. There's actually a lot of opportunities on Friday, but I'm going to give you just the key ones. Had you only done these key indicators, this is what your results could have been, should have been on Friday. First of all, that purple dot over there, that's where you'd have entered using our indicators to the upside. All right. Number one. Number two, you'd have entered there again to the upside. And by the way, I've got exit points for these. And number three, you would have entered there on the upside as well. This is all before 12 noon Eastern time. Had you entered in those times, and again, using the indicators that are going to be on the charts, those are all going to be on the charts. You'll see them all fully narrated, fully explained in our trading room. Every morning we do that, Monday to Friday, right? 9:20 to 10:30 Eastern time. Talk about that a little bit. Here's what your results could have been. Your morning trades, you could have picked up 8% in 5 minutes, 18% in 25 minutes, and 7% in 20 minutes going just in those three dots. By the way, there were other opportunities along the way as well. I'm just kind of giving you the basic ones, the ones that, the no-brainer ones that everybody just automatically get in when you see the setup. There's no decision to make. There's nothing to just get in, right? Get into the upside. Here, if you only traded 10 contracts, your potential would have been 32% all before noon, 32%. But realistically, right? Never mind the potential. You know, you may get it, you may not. But realistically, if you're only going for, right, if you're only going for 6% per trade, this is what I'm saying, that those three charts you'd have had 18% had you gotten in on those three trades, right? 18%. Now, that's only 6% on each of these three trades. All right, you with me? If you invested 10 contracts, it would have cost you $4,300 or less. That was kind of the maximum of the investment, $4,300 or less, and your returns would have been over $774 in total. All right, $774 in total. In reality, you probably would have made $1,000. Okay, in reality, $1,000 because you would have followed along with us in the trading room. You'd have exited with more than your 6% gains. Okay. I'm just going by a real sort of a blind kind of a trade where you buy in, put it up for sales for a 6% gain and get out when that happens. But in reality, if you followed our trading room, you would have made more money. And I know a lot of people had gotten in and made much more money than that. Now, I like to trade only in the mornings, but if you'd have stayed with us during the day, there'd been another entry on that dot over there. That was actually going to there's another two trades here. That would have been to the downside, and this another one here. That other purple dot, if you'd have just followed our trades, that would have been back up to the upside. Okay, to the downside, you're with puts. To the upside, you're with calls. Call up, put down. Okay, very easy. So these afternoon trades would have delivered to you, excuse me, another 40% in 34 minutes. This is actually wrong. This is not right. Okay, this would have actually been, oh, I had these numbers. Where would these numbers been? Story 120. This is actually, I apologize for this. Who did this PowerPoint? 120 and 215. 215. These are the numbers. All right. All right. The percentages are right. It's just the times are wrong. So let's get this right. Here we go. 1:20 p.m., 40% to the downside, and at 2:15, another 16% to the upside in 23 minutes. That was the potential. Let's say you want to do just another 6%. Well, there would have been another 12% in that trade. All right. Now, I didn't even include that. So I didn't do those because personally, I don't like to trade in the afternoon, especially on Fridays. I get involved in other things and do other things, just kind of have fun. So I would have, here's the reason I don't like to trade in the afternoon because if something should go horribly wrong and the market turns against you, that 4 o'clock bell comes up real fast, right? And the way I figure it, if you didn't make your money in the morning, you're probably not going to make it in the afternoon. Myself, I made enough money in the morning. I was okay with that. I didn't have to trade in the afternoon. But for those die-hard fans that want to just continue trading all day long, there'd have been another two easy trades in there. Actually, there'd have been more. I just put the ones that were just no-brainers, following our very simple indicators that we have in the trading room. That would have yielded you quite a bit more money. All right. So now, of course, your question is going to be, well, what? We're going to risk $4,000 to make 600? Actually, that is 700. Right, let's fix this one up again to 700. The answer is absolutely no. You're not risking 4,000 to make 700. Okay. Number one, you have plenty of time. Each one of those trades I mentioned, there's actually lots of time, including 1 week plus Friday. All right. So you're going to have a low theta loss. Theta, that's your time loss. So as you buy an option, don't forget, of course, there are these factors that apply to the option, and I'm going to talk about that in the primer. Excuse me. So time is theta, and the way we trade, time is actually your enemy. It's not your friend. If you want time to be your friend, then you have to sell options, but you have to back that up with the underlying stock. It could get very expensive. And if you make a mistake, it could be very, very, very costly to you. So, but what we do is we just want to buy first and then we sell. And we trade options, calls and puts. Buy first, then sell. So in this case, time is actually our enemy, but we minimize that loss by that risk by buying time. Time is like insurance. Okay, time is insurance. So the more time you have, the more insurance you have, the less data loss, time loss you have, and therefore you end up with less risk. Now you don't want to buy too much time because number one, the options are going to be very, very expensive. But more than that, you're not going to get as much of a move. So we have this figured out as to what sort of that ideal expiration is, and we figure it's going to be anywhere from 3 to 6, 7, 8 days out. Number two, we're going to sell long before expiration, recovering most, if not all, the premium. Now, our objective is to sell hopefully in a few minutes, which is what we had done here, maybe half an hour or something like that. So you're not going to lose a lot in time value, and you're going to recover all that premium anyway. So even though maybe those options cost $3 or $3.50 or something, you're going to get all that back plus some, right? So it's not like you're losing that money. You're not really risking that money. Now, of course, you're going to say, well, why would I buy that extra time if I'm going to be selling it right away? Well, the answer to that is even though you're going to be selling it in a short term, that's the objective, but you never know. You might end up holding it a couple hours. And if you buy something that's going to expire today or tomorrow, you're going to see the effects of that theta loss even within a couple hours. In other words, if you buy something that's going to expire today and you pay $3 for it, in 2 hours, that option might only be worth two, well, it won't be $2. It'll be, say, $1.20. In 2 hours, that option might be worth only $1, right? So that means, the stock would have to go up a lot, very much so, to make up for that 20-cent theta loss. Now, don't worry if I'm losing you on all this. All right, you're going to pick it up along the way here. Just know that the more time you buy, the less risk you have as far as the theta loss. So you're going to get all that money back anyway. And these entries are actually based on high probability setups with 6%, and I say almost guaranteed. Now, of course, there's no guarantee in any of this. You know that, but when I say almost guaranteed, I'm just thinking here, you know, unless we get at least 6% on each of these trades, these high probability trades, we're never going to suggest that these trades are good. Okay. We're actually looking for, excuse me, quite a bit more than a 6% gain. But as a minimum, you should get 6% on these trades as a minimum. Okay. Mostly governed by your emotional control. Also, there is no high impact news scheduled in the near future to thwart the market. And for those reasons, that's why we're very comfortable in making these trades. All right. So while you can say, argue that, well, I'm risking 4,000 to make 700, I can assure you that risk is really not relevant. It's not it's on it's not warranted. You're actually not. Now, if you walk away and just leave them sitting there, okay, you're stand to lose. Options trading is not a buy and hold strategy. Remember as a kid you played that game, hot potato? Somebody throws you a ball or something, you got to get rid of it right away. It's like a hot potato or something. Well, that's kind of the way options are. You want to buy them and then you want to get rid of them right away, right? It's not a buy and hold strategy. Unlike stocks. Stocks you can buy, you can hold them forever if you want, will them to your kids, whatever. Uh, you know, and but an option is not like that. An option is actually a contract that enables you to trade the underlying stock for a certain price by a certain date, but you're not obliged to. So you don't want to hold on to this thing. You want to look and see, well, can I get rid of it? So before you engage in buying an option, you want to make sure that you can get rid of it, right? You want to, get rid of it first. All right, so that's kind of taking us up to the next step here. Here's a young lady, and what we're going to do here is we are going to talk about if you're looking for market success, we got programs that work for you. All you have to do is just join our tribe, folks. All right. And here's what our tribe is. This is where this is where we talk about what we do, right? So every morning, I mentioned about the trading room. This is where my associate John Johnson and I get together. Now, John is a retired, well, he's retired from Eagle Financial Products. He had his own newsletter or something out for years, and then he quit. But he couldn't stay retired long. He was out for about 2 months, then he joined us. But he's actually a lawyer too. Now, don't hold that against him. He doesn't really practice law anymore. We like to kid him around about that. So, but he's a great guy, very funny, very knowledgeable, very informative, very engaging, very empathetic. He really wants you to learn this stuff. Now, he uses indicators that I don't use. I use indicators that he doesn't use. All right. But we trade the same thing. So we have a saying that when our indicators unite, our trades ignite. So this is actually really cool. And that's why we have these high probability trades. So when he says, I think the market's going up, and I say, yeah, I see the market going up as well, and here's where it's going to go, you might want to get into call options because chances are the market's going up. And that's one of the reasons we're so successful. We come at it from different directions, and this is why it works, right? So he and I host the trading room every morning, and this is where strategies come alive every morning, 9:20 to 10:30 Eastern time every day. Monday through Friday. As long as there's a stock market, we're going to be there, right? This is a learn and earn, interactive, exciting trading session. It's not a watch you and John trade session. We trade and we explain it all, right? And we narrate our entire, program here. So what we're doing and why we're doing, what we're looking at, what we're trading, our entry points, our exit points, why we get in, why we get out. We explain all of that, right? Now it goes fast. I'm not going to kid you. It does kind of go fast. Sometimes it goes faster than others, but don't worry if you're not picking it up. You will. You will. You will. You will. Um, and um, and you'll get the hang of it pretty quick. Do you remember when you learned to drive a car? Is anybody here drive a standard transmission car? You remember when you first started driving a standard? And okay, so you get in, you hit the clutch, you put it in gear, start the car, let the clutch out, put the gas in, it was all a lot of stuff going on, and then you stalled it, and you stalled it, and you stalled it again, and you stalled it, and you said, am I ever going to learn this? And you never thought you ever would, but eventually you just automatically did it. You don't even think about it. You get into the car and you just go, right? And it's as smooth as silk. You don't even thinking about it. And that's the way it is with this too. All right. So you get into the trading room or any of our programs actually, and at first you might be a little intimidated or a little hesitant or whatever, and that's fine. All I suggest there is just get into some paper trades first, lots of paper trades. We go over all the detail on that. Then transition to real money, starting small, work your way up. Okay. In fact, I even tell people do a lot of paper trades, and then when you're ready to go, say, okay, do one real trade, and then back to say 10 paper trades, and then do another real, and then another 8 or 9 paper trades. So you make this transition seamlessly. Some people argue, saying, well, there's no such thing as paper trading because when you're trading real money, right, real emotions kick in, right? Because now you're trading real money, and now you're seeing your equity floating. It's like you're floating in the air, right? Like, oh my gosh, okay, I'm making money, and oh, now I'm losing money. No, what are we gonna do? I'm down, $200. I'm down $300, whatever, right? You panic, and where a lot of people go wrong, they start selling. They sell when they're losing, and they're happy because they only lost $300. Hello, that's not the objective here. And they keep watching their trade after they sell, having lost $300. They keep watching it like it's still their trade. And then 5 minutes later, it reverses, goes back up. And then in 10 minutes, they say, oh, had I stayed with it, I would have made, right? If I only stayed with it, I would have made. So there's the most useless word in the English language, if. If. That should be totally excluded, right? So, but you didn't. You didn't stay with it. You sold, you took the heat, you didn't have the patience to wait it out. You did your homework, you thought that it was going to go up, you didn't wait it out, and you lost. So, anyway, we talk about all that stuff in the trading room. This is what we do. Folks, we teach what we trade, and we trade what we teach, and it's interactive. So, you're going to get your questions answered live in the trading room. All right. And we endeavor to answer all of them now. There are a lot of people online. We're, get a lot of questions, but we do our best to get all our questions answered. All right, next up, if you cannot be in the trading room, there are a couple programs that are pretty cool. The Day Trade Spy Signal, all right, this is the particular option that's sent to your cell phone and email 3 to 5 times a week, usually in the mornings. I think it's always in the mornings, all right? This is an algo-based trade, and it's, again, morning trades, and this facilitates for an immediate buy. So as soon as you get the signal on your cell phone, all right, pull up your app on your cell phone or wherever you are on your computer, make the trade. Don't question it, just make the trade. It's either going to be a call or a put, and immediately put it up for sale for a 5% profit target. Okay, and just leave it. Now, if it is not sold by the end of the day, you can sell it for the market on close. Now, those of you who totally understand our system, many of you, if you are in a losing trade, and once in a while it happens, not too often, once in a while it happens, and you understand what we do, you may want to hold it overnight. There's going to be ample time in these trades to hold overnight if you need to. However, the program does call for sell it by the end of the day. And using that strategy, I think we're pushing about 90% success rate on the day trade spy signal. Now, this is very good because let's say you're taking the kids to school or you're driving to work or you're at work, excuse me, and you just cannot trade in front of a computer, but you have your cell phone, you can still place those trades. Next up is our day trade spy pick of the day. All right. This is a particular option that is emailed to you at about 9 o'clock Eastern time every morning, 5 times a week. All right. Now, these are handpicked. All right. John and I, we get together in pre-market and we battle it out, determine, well, which way is the market going to go? Where's the propensity, to the upside or the downside? And once we make a determination, we submit that and it goes out into your email. And this is to be bought at market open. So what you do is you wait at 9:30 when the market opens. If it's a call option, look at your 1 minute chart. If the pressure is to the upside, you buy right then. If the pressure is to the downside and it's a call option to pick, wait until the pressure reverses back to the upside, then get in. Immediately get in. All right. Now, here's the kicker. If the market is very active, let's say it's a call option, the market's going up and up and up, and you put it in for the ask price, you may not get it because the market's pushing up. And by the time your order goes into the market, it's like it's old. So you might have lost 2, 3 cents. If you want it, you want to buy it. So here's a tip. Here's a hot tip. If you want to buy it and the market's really moving fast, put in your order to buy it for 2 or 3, maybe even 4 cents more than the ask price. I know it's counterintuitive. You're going to say, well, I'm giving you the ask price. Well, but by the time your order gets to the market, the ask price is old. So, but if you get ahead of the game and you say put in for 2 or 3, maybe 4 cents more than the ask price, that puts you to the front of the line and you're going to get the option. And then as it goes up, you're riding it up. That's one way we make 6, 7, 8% right out of the gate in about 2, 3 minutes. All right. That's a pretty cool little secret. And that really works very well. Again, buy it, put it up for sale for 6% gain. Now, if you have not sold this one at the end of the day, you can still hold this overnight. It's very rare. I can't remember the last time this was an overnight hold, but you can hold it overnight if it's not sold. That is the pick of the day. Excuse me. Very, very popular programs, Day Trade Spy Signal, and the pick of the day, ideal for those who cannot be in our trading room. Now, there's the Inner Circle. This is the program that actually started back in 2010 when people coursed me to show them. We started this thing, and this is actually pretty cool. Every morning, I send out, actually, John sends this one out now, the morning market assessment sent to you at about 9 o'clock in the morning. So he analyzes the market. He does the heavy lifting, and he will analyze it so you don't have to. We get all the inputs from the various news feeds. There are a lot of news feeds, Twitter feeds, oh, sorry, X feeds, Truth Social, I think that's in there, and which is Trump's feed. And we get all the news, and then we analyze it all. So we do all that analysis for you, so you don't have to wake up early. You don't have to get up at 5 in the morning, right, to do all this. We do it for you. And then we also send you a follow-up report later in the day, early evening, and you'll be invited to our Wednesday night interactive meetups at 8 o'clock. John hosts these all the time every Wednesday night, talks about a particular topic. Bring your questions, he'll answer those for you. These sessions, by the way, are recorded, so if you can't get to them, not a problem. You're going to get the recording right after the sessions are done. This is ideal for those of you in Europe, where 8 o'clock at night is like 2 or 3 in the morning for you. So this is perfect for you. And as soon as you get up, the recording is right there. This is an outstanding way to get started. If you're new, it's a great way to stay in the know if you are a seasoned trader. It's also our most affordable service. All right, most affordable service. That is the pick of the day. Now, as far as the pricing, you can go to our website, daytradespy.com. You'll find all the pricing there, but I'm going to give you a hint. For the best pricing, contact customer service at daytradespy.com. Simply email them and tell them what services you want. Ask for the best price. And I believe in most cases, if not all, they will give you a better price than you will see online. All right. Don't ask me why, it's just the way it is. All right. And be patient. I understand sometimes customer service gets really bogged down and they might even take 2, maybe even 3 days to respond to you, but it's worth the wait. Believe me, they'll respond. I know they have something like 50,000 clients plus just from our services. And so there's going to be a lot of, there might be some wait time in there. So it might take a couple of days to reply, but be patient. Maybe send them a follow-up email. They'll get back to you. But ask for the best price and they'll give you a link for the best price. Customer service at DayTradeSPY. All right, with that, let's get into some questions, folks. I'm trying not to keep you all night here. Questions, you'll find the questions box on your Zoom dashboard. Click on that, and I'm going to go into the questions. All right, a lot of people have varying degrees of options knowledge, which is great. And okay. Congratulations to Jeff D. He's in our trading room. He's reporting over 590 options trades, only 33 losses. Thanks to you, Jeff. We got to work on those 33 losses, buddy. We got to get those losses down. 33, that's not good. But anyway, that's I think if you limited your loss, you're doing okay there. So, question here, do we use the ADX indicator? No, we do not, Mark. We do not use our ADX indicator. I'm not going to tell you what we do use. Those are kind of proprietary. We want you in the trading room, obviously, right? And for another reason is because you can't, you're not going to learn how to trade in a free hour-long session, right, on a Sunday night. That's just not going to happen. All right. To get good at this, you have to spend a lot of time. All right. You have to spend a lot of time with this. Okay. So by that I mean, get in there, learn the techniques, do a lot of paper trades, transition into real trades, and you're going to learn more about yourself than the stock market. Anybody can learn the strategies. They're not that difficult to learn, okay? What it is learning to control your emotions. The emotions in this business are your fear, greed, ego, FOMO, right? Fear of missing out, and YOLO, you only live once. And you'll probably find that you're going to go through all of them at some point or another. I mentioned fear earlier when you're losing $300 and you want to bail out because you think you're going to lose everything, so you bail out. That's fear. Greed, that's when it goes the other way, right? The market's going in your favor, so now you're up $300. You just invested 4,000, you're up 300, then 400, then 500. You say, "Oh my gosh, this is going to the moon," right? And you get greedy. You keep pushing the envelope further and further and further, higher and higher, right? Your exit price, thinking that you're going to make all this money. And you may. But at some point, the market's going to stop. It's going to hit some resistance level and reverse on you. Now, here's what happens. So let's say you're up $600 and the market reverses. It goes down. Oh, now you're only up 500. Well, in your mind, you're thinking, wait a second, I was up 600. Now the market just took 100 away from me, which it never did because you never hit the sell button. Okay. It's the market's money, not yours. And but you feel that the market took away $100. Now you're going to say, well, I'm going to stay with it until it reverses, goes back up, and gives me my $100 back. Well, then it goes down $400, $300, $200. And sometimes they'll go against you. Oh my gosh. Now you're saying, oh my gosh, I can't believe it. I was up 600. Now I'm down 200. I'm down 300. What an idiot. How could I let that slip through my fingers? Well, just wait until it goes back up. Well, now it goes back up. You're back up three, $400, maybe $500. At what point are you going to sell it? You're going to wait till it goes back 600? Maybe it will, maybe it won't, right? So you sell it and if you didn't get your 600, you're disappointed. You might have made 300. Now, is that so bad? You might have done that in say half an hour, right? Well, you made $300 on a $4,000 investment. Is that so bad in half an hour? If you think that's bad, then you need to see a shrink. Okay. But that's your greed. That's the greed kicking in, right? Now there's ego. All right. Ego is another big one. And I got to tell you, yeah, I got ego. Everybody's got an ego, I think. I don't know. It's not, this one lady I work with, wonderful lady. Let me just see if she's on. I don't think she's on. I don't want to. I don't want to. Let's just. You know what I want to do? I want to. I'm gonna give her a name. I'm gonna call her Diane. I'm just gonna call her Diane. Uh, okay. Because I don't want to look for her. There's a lot of names. I can't be looking for these names. But what happened was, so her boyfriend was a cardiologist. All right. So he's making a lot of money on the operating table, right? He's making a lot of money, but he also dabbled in trading. I'm going back years here, many, many, many years. And so Diane, not a real name, but just protecting the guilty here. We hung out together and in the trading role. And I remember one day she came to me and said, "Oh, she's all bad and stuff." And we're going somewhere. We're going down to New Jersey, something, trading with a bunch of guys. I said, "Oh, what's your problem?" I said to her, this is brash. I said, "Who peed in your cornflakes this morning?" She said, "Oh, so and so we traded. He made all this money on gold, on gold." I said, "So he made all this money and you're mad because he made all this money?" She said, "Yeah, I'm the trader in this couple. Why is he trading? You see me doctoring? I'm not a doctor. Why is he trading? He should not be the trader." I said, "Wait a second. You're not happy because your boyfriend made all this money and you're mad? You should be happy." So out of spite, she went out and bought all these gold warrants. I forgot now, maybe about $25,000 worth of these gold warrants. I'm not even really sure what these are. But she bought this stuff and she ended up losing a fair bit of money on this, apparently. So I think a warrant is kind of like an option. I'm not really sure. But anyway, her ego got in the way. Big time ego. And she ended up losing money over it. So I'll never forget that story because I thought, watch the ego, right? And here's the thing, is you're making money, your ego builds up like, oh, wow, I'm in a roll. There's one day last week I had 19 trades. I think it was Thursday, Wednesday or Thursday. I was on a roll. I was on a roll. But the more I traded, the more money I made in this thing. I had to really focus and not get stupid about it because it's very easy. There's a direct and inverse relationship between how much money you have and how much brains you have. In other words, the more money you make, the less brain you lose, start losing your brains and you start making stupid moves. But I was very careful and I cut off after 19 trades. I was near the end of the day anyway. So then there's FOMO, right? Fear of missing out, right? This is where you're standing in there's a party inside. You're on the outside looking in through a window. Everybody's having fun. They're all dancing and carrying on. You're on the outside. Fear of missing out. Oh, I got to get in. There's money being made and I'm not part of it. So you buy. You just buy. You ignore the indicators. You ignore the reasons to get in. You ignore all that. You get in, and now you're finding yourself, oh, that was a bad move. Or the other one, you only live once. Oh, I love this one here. Well, I only have so much money. I'm just going to put it all out there and see what happens, right? So anyway, these are all emotions, and you'll find that learning to control your emotions, you'll find that the enemy is not the stock market at all. That's just the arena that we play in. Actually, the enemy is the person in the mirror. All right, let's get to some more questions here. All right, where it says DTS wins and losses, is that including both you and John's from the trading room? The answer is yes. So that refers back to I hate it when my program gets stuck and I have this funny look on my face. It always seems to capture the worst possible pose I can. I guess I'm not very photogenic, right? But anyway, yes. So that earlier screen when I posted my wins and losses, that includes John and all of our trades in the trading room. When I say six wins, no losses, 7 wins, no losses, 7 wins, one loss, whatever, that's in the trading room. All right, and that includes all of our trades. That includes John's trades, my trades, pick of the day, day trades by signal. Uh, that's pretty well it. All right, so that's what it is. All right, let's see. What do we have here? Any more questions coming in, folks? Give me some questions. All right, reports during government shutdown. Yeah, so there's some economic reports that governments, Bureau of Labor Statistics, they issue certain reports. Well, we didn't get them. I think we're looking for something on Thursday or Friday. Didn't come. I think unemployment claims never showed up. Never showed up. That's okay. The market just built on its momentum. It didn't matter. And the market continued to go up. The market was very resilient. And it liked the fact that the government was shut down. And there's what, 750,000 jobs on the line or something. By the way, we all know, right? We all know that it's not going to shut down for long. They're going to come up with some resolution. What they're going to do is they're going to raise the debt ceiling, right? Where are they now? What, $37 trillion dollars or some ridiculous thing? $37.5 trillion dollars in debt. We will never pay that back. But anyway, uh, when that resolution comes, expect the market to go back up again. Don't tell me why, but market likes stability. It doesn't like instability. All right, the market can handle good news, it can handle bad news. It's the uncertainty that the market doesn't like. Excuse me. All right, Frank, I'm new to your trading room and very happy with profits and your overall calm, insightful guidance. Thank you very much for that, Frank. Carlos, all right, most of the signals are winners. Can I use 30% of my total balance on each? I'd be careful about going that high, Carlos. Using 30% of your total balance on each trade. Because not if, when the market turns against you, all right, can you handle the loss? How much loss are you going to take? Right? Uh, I would go, I mean, it depends on how much money you have available to invest. Personally, I would probably keep it around 10, 15%, depends on how much confidence you have and how controlled you are. Okay. Remember the underlying premise, you should never trade more than you can afford to lose, right? Never trade your mortgage money or your rent money. Never trade more than you can afford to lose. You are going to have losers. There's going to be winners. There's going to be losers. All right. Think of it as having two buckets. One is bucket of luck, which is full, and the other bucket is skill, which is empty when you start. And the idea here is to eventually take the full luck bucket, pour it into the skill bucket. So after you learn and master what we teach you, that you will have more skill than luck. So you're not relying on luck. Luck is not when something you want to rely on in the stock market, right? But I would go say 10, no more than 15%. And even then, that's pretty rich, all right? All right. Question with the pick of the day. Have you ever had to hold a trade multiple days? Okay, so in reality, yes, once in a while, and that is built into the pick of the day to be able to be held multiple days if you so choose. Now, for our reporting, and our bosses at Eagle want us to close out our trades at the end of the day. Okay. So if the stock is losing, if the option is losing, we close it out. We have to report a loss. But the reality is, we probably actually still hold on and we reap our rewards the following day and maybe once in a while the day after. Those trades have lots of time in them. Basically, if it's a Monday or Tuesday, we'll pick the options that expire on the Friday. If it's a Wednesday, Thursday, or Friday, we'll take the options that expire the following Friday. All right, the following Friday. So, all right, so we got lots of time. Low theta loss. All right, but for reporting, like I say, we have to wrap it up at the end of the day. So sometimes we have to report this loss, even though in reality it's not. All right, do you scale in and scale out of your trades? As a rule, I don't. However, Um, if I so personally for my trades, I will I don't plan on scaling in, but let's say I'm in a trade and it goes against me, I'll go in and repair a trade. So effectively, I'm scaling in. All right, and that works very well for me. The other day I had a really good one in that. I forgot what the numbers were, but I got in and the market turned against me. But later on in the day, I scaled in, which lowered my cost base, right? Which lowered my profit target. And I came up with a very nice profit. So that was pretty cool. All right, here's another question here. Why are you bothering to train people when you can simply trade if you're any good? Okay, well that's a good question that comes up a lot. So the question is why bother training other people when we could simply trade and just make money trading? So the answer to that is, and John and I will concur on this, we just enjoy it. So we enjoy seeing other people do well in this business. We just like teaching this. Yes, we don't have to teach. We can stop teaching at any time, right? And just trade. And we do very well trading ourselves. That's not an issue. But we enjoy seeing the results. I had some very good emails this week, and I should have actually, you know what, by the time I find them, let's see if maybe I can get to them. Let me just see if I can find one. Oh, let me take a look here. Just I can read you some of these if I can find them real quick. Let me think here. Bear with me. I don't want to waste a lot of time. Here's one. Uh, Coralie. Coralie. She is. I'm so excited. Coralie, are you online, Coralie? Coralie. Let's see. Is Coralie on? I don't think she's on. Okay, that's fine. She is not on, but she is going to bring her up here. Where did she go? Okay, she's not on tonight. Not a problem. I'm just going to skimming through some of the skimming through the. Okay, here it is. I don't know if you have a thousand, she's a gentleman. I don't know if you have $1,000 club or not, but I'm excited to tell you I just joined it. The $1,000 club to me is getting to the point where you have earned over $20,000 trading a la DTS with less than $5,000 in starting capital. I'm making my first transfer of $1,000 out of my DTS trading account to my dedicated savings account as you recommended on a monthly habit. I really can't believe it. It has been such a long haul for me, and many other times I almost gave up. Anyway, she goes on, quite a lengthy email. Um, I like this part here. I'm backing away from my other trading services that recommended stocks and or options based on one fabulous story or another, or fabulous software showing a certain pattern. Using the DTS process and attending the trading room, I feel I actually have much more control over my winning and losing than if I plop a trade out there and spending weeks watching it go up and down. Anyway, goes on here. At 73 years of age, every dollar is way too precious to just hope, which is what I'm thinking I was doing with other services. Anyway, she's doing very, very well. Congratulations on that. And I think I'm looking for another one that I might have had here from, oh, here's another one from, Crystal. Her name is Crystal. Oh my gosh. She says, I don't want to keep going on this. It sounds like I'm patting myself on the back. I'm just trying to give you an idea of, some of the accolades that come in here. Okay. She says, I wasted many thousands of dollars over numerous years on various stock gurus selling their ideas. Um, and she's talking about how we are the guru that she's thanking us from the bottom of her heart. Anyway, thank you for that, Crystal. So I'm not going to get all the detail. We get these all the time, folks. All right, let's see any other questions. So anyway, we enjoy teaching it. We enjoy seeing the results of our people doing very well, and that is actually really exciting. So. All right, here's another comment here from Tatiana. Tatiana, I hope I pronounced that right. I missed the last few months trading numbers. Then 5,000 to 50,000 challenge. Tell me about it. Okay, so here's what happened. January the 6th, I don't have the numbers here because we did this last week. So we started trading a $5,000 account last January the 6th, trading only the profits, looking mostly at calls. We're able to trade once in a while, sometimes three times a day, but mostly just once a day. Okay. And we ramped that up from 5,000 to 50,000. The idea was to take it to $50,000 in 1 year, actually we did that in less than 9 months. So we're all very excited that we hit our target, I guess about a week and a half ago. So we hit our target of 50,000, 10 times our money in less than 9 months. So that was all pretty good. By the way, people are asking to continue that. So what we're probably going to do is continue that, but maybe do it from $5,000 to 25,000 by the end of this year. Okay, so probably going to start that. I'm not sure going to start it tomorrow, maybe the next couple of days sometime. So. All right. Da, da, da. Wow, nice. Da, da, da. Okay, David S. Thank you so much for this comment here. I've done exceedingly well for myself, and I now teach 20 people who really need to earn more. What I've learned, I like your simplicity approach, and now employ it. Sounds good. Right. Frank H. I hear I just subscribed to DayTradeSPY. Love your service. Can you tell me how I can see afternoon signals? Frank, if you're in the trading room, we'll show you all that tomorrow morning in the trading room. All right. So, all right, folks. So it's 8:58. I want to kind of move this along. So we're having a contest now. This is a contest. So what I want you to do is pick a number from 1 to 100, and punch it up in the questions box. All right. I'm going to give you about 30 seconds as I queue up famous, my famous Day Trade Spy random number generator. Random number generator. This is our special little program that we have. And I want you to give me a number 1 to 100, and the person closest to it gets the right? Gets the ebook Triumphs and Tragedies. This is a 40 some page ebook, and it talks about all the people, not all, but some of the people, all of these people in the book have come through our service over the years, and some reports of incredible triumphs, others some unbelievable tragedies. All right. So I think you'll really enjoy it. It's a really good read, very easy read, and it's very inspiring. Other people say it's very entertaining. Other people say, you're full of it, you're delusional. I say, no, these are all real stories, real stories. So, all right, give me your numbers, folks. We're going to cut it off in about 10 seconds here. All right, hang on. So I'm going to cut off in about 8 seconds. All right, five, four, three, two, one. Okay, no more, no more numbers. All right, give me your numbers. Give me your numbers. I got all your numbers, right? 1 to 100. Okay, let's pull up our random access generator. Where is it? I got it right here. Here we go. All right, that's not the number, folks. That's not the number. Now I'm going to hit the button, and whatever the number is, the closest to it gets it. The number is 17. The number is 17. Okay, let's go back real quick in our numbers. Okay, all right. Okay, let me just pull these numbers out here. I have, by the way, if we have a tie, you both get the number. All right, you both get the ebook. Arnold P has 44. Sorry, 14, 14. He's within three number. Oh, we have a winner. Kent. Kent H. I can't say his real name for privacy concerns, but Kent, congratulations. You will. Let's see who else won it, if anybody. And it looks like Mark J. Wow. Okay, we have two people. Two people that hit 17. Wow, that's great news. Okay, congratulations to Kent H and Mark J. You will get the ebook, Triumphs and Tragedies, sent to you later tonight. All right, so folks, what I'm going to do now, I'm going to wrap it up. And if anybody wants to stay on in a couple of minutes here, a few minutes, actually in about 30 seconds, right? Let's do this. I'm going to play you the extra to the song, and in about 15, 20 seconds or so, we'll continue on with our options primer. For anybody who is brand new, you might want to get in on this one here. So, all right, so we'll see you back. And if you wait long enough and you exit, you should get a URL that will let you subscribe to the trading. See you in a bit. Don't go too far for the options primer.
Just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
All right, we are back. We are back for our options primer. For those of you who are brand new to options trading, and I see a lot of people still online. There it is. If you are new to options, we're just going to spend a few minutes going through this. What we do, we day trade options on SPY, period. That is all we do. All right, SPY, all SPY. It's the highest traded stock out there. It is affordable, diverse, liquid, huge, huge profit potential. It's also very exciting trading. I love trading. It's very exciting, okay? You're not gonna beat that for excitement. And I love trading. I love trading because you know, it gets the adrenaline going every morning. I've never been so excited every morning. You know how you're in a job and after a few years you go, "Oh, I gotta get up and go to work." I've never felt that with options trading. Every day I get excited. Oh, good. I get to get up, go out there and beat the market in its own game. And that's what SPY does. All right. So, what are options? Options are actually contracts. They give the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. Now, just have to remember two names. Calls. If you expect the stock to rise, you buy a call option. If you expect the stock to go down, you buy a put option. Call up, put down. Few other terms to remember. Strike price. This is the set price at which the stock can be bought or sold when the option is exercised, if you so choose. Expiration date, when the contract expires. These are not, I mentioned earlier, they're not buy and hold strategies, right? They are going to expire. And when they do, right, they're worthless. It's vanish. Nothing there. Now, there's three ways you can buy them in the money. That's when the market price of the underlying security is above the strike price for calls or below the strike price it puts. Allows the option holder to exercise it profitably. If you're out of the money, this is when the market price of the underlying security is below the strike price for calls or above the strike price for puts. At expiration, it becomes worthless. And of course, there's the at the money, and that's the one we like to trade. That is where the market price and the option price, the strike price, are pretty much the same. In reality, I like to buy, say, just the next level out of the money, okay, because I expect the market to go into the money. So that's kind of the best place for it. So, All right, pros and cons with options trading. The pros, lots of flexibility. They are cost efficient, huge leverage, huge return potential. Um, Many strategies available. It's fun, exciting trading. The strategies that we employ, it's just a few, but I mean, there's a million strategies out there. You can find your own or use ours. A lot of people like to use ours. There are some cons to options trading. I'm not going to kid you. There's the time decay. That's that theta loss I was talking about. You also have commissions that you have to consider, and they are risky because when the stock turns against you, all right, you lose that premium pretty quick. And if you got a lot of money in these options, sorry about your luck, right? Goes against you. So there is risk to these things. You never want to trade more than you can afford to lose. One stock, one strategy, 1 hour a day. And over the years, I got to tell you, we figured out what works and what doesn't work in both trading and training. And that's really important. So why SPY? SPY follows the top 500 US stocks. Very efficient use of analysis time. The moves are quick. Earn your daily gains faster. Options trading using our system is fairly reliable, fairly consistent, predictive, and fairly, excuse me, forgiving. You can actually be in a bad trade, and if you have ample time, you're probably going to be okay. All right. Now, prices can be anticipated in any market, whether it's up or down. That's what I like about SPY. You can make money both going up or down. Sometimes we see the market, and you know what? This thing's going to drop, and we get into, we buy puts, and we make a lot of money to the downside. You know, what what kind of thinking is that where I hope the stock crashes and burns? I mean, but that's what it is, right? That's the beauty of it. Want you to note the disclaimer I mentioned at the beginning of the session here that obviously, doesn't happen all the time. There's risk. You're only responsible for all your own trading. Why SPY now? Simple. Learn something new. Stay mentally sharp. I found over the years kind of a nice byproduct of options trading is that it keeps you mentally sharp. I know a lot of people after they retire from a career, in 6 months they're dead. There's no reason to live. They feel worthless. They have no reason to get up in the morning anymore. Their purpose in life is gone, and they die very quickly. With options trading, you actually keep your mental wits about you. You have to keep learning. Keep your sharpness about you. You can earn while you learn, right? Time passes anyway. You might as well make money along the way. I know a lot of traders, and what happened was this: all their lives they made money, then they retire. Now they're going into their savings and they're spending their money, right? And you hope that your savings will outlast your life. That's kind of important. But options traders, they've earned their money all their lives, and they get into options trading. Then they keep making money. They keep making money well into their 70s, 80s. I have traders in our trading room in their 90s, folks. I've met some of them. I have one gentleman, I don't know if he's online or not, Phil L. Where did I meet Phil? I don't know if it was Las Vegas. I think it was in Las Vegas. Okay, I don't think he's on right now. I met him in Las Vegas in a wheelchair. Rolls in a wheelchair. Says, "You, I had to meet you. I came out here." Oh my gosh, Phil, thank you so much. He's, I think, 93 or something. Folks, huge profit potential for serious traders. You can get a dream lifestyle, truly achievable. I'm not kidding you. There are people that are buying a lot of cool things with the money they make trading options, or they're doing cool things about them. They're taking trips. They're funding their kids and grandkids' education, and they're doing a lot of great things. They're contributing to their favorite charities. It's exciting, thrilling to beat the market. There's something special about beating the market in its own game. To me, that's very rewarding. And here's what I like about it. You can pass this knowledge on to your kids. It's financial security, right? My kids know how to trade, which is very liberating for me because I don't have to worry about them, right? I don't have to worry about them getting a pink slip from a company they might have worked for 30 years. It happens. Well, if they know how to trade, they know how to make money. As an example, my daughter after college, went to Thailand to teach English as a second language. All right. And they don't pay you a lot in that field. It's mostly the experience that you get. But she liked to travel around a lot. And I always ask her, Lex, you need some money? How are you? No, no, Dad, I could. I can trade SPY and make money. The US dollar goes far right here in this part of the world. I can trade money, make money as I need it. And she did. She did. So which is kind of cool. I don't have to give her money. More importantly, I know she's secure in knowing she can make money for herself. And we can pass this knowledge on to your kids. I can't think of a more, a more secure feeling that you know your kids are okay. Those are the reasons to get in this. Now, here's the question. Well, I don't get the leverage you talk about the leverage. So let's say you want to compare the stock to the option. Now, each option controls 100 underlying shares, right? So if you were to get in a SPY now, you're going to pay roughly $670 a share. Well, that's $67,000 that you've got tied up. Whether you put half of it in and margin the other half, you're still liable, right? You're still liable. So you're tying up a lot of money to control 100 shares. Now, let's say you buy one contract for $300. Let's say $3 is what it costs, going to cost you $300. This excludes commission, by the way. It's just a sample. And that's what this option would be, say roughly $3. Now, if the stock rises $1, all right, you now have $67,100. If the stock moves up $1, there's this thing called the delta, which is the relationship between the option vis-a-vis the stock. So a $3 option will probably be about a 50 delta, which means if the stock moves a dollar, your option moves up 50 cents. Well, guess what? Your option now is worth $350. All right, same trade. Your stock is worth 67,100 versus 350 for the option. Well, here is your return on investment. With the stock, you're looking at 0.15%, not a whole lot. With the option, you're looking at 17%. This can happen very quickly, and sometimes a matter of seconds or a couple of minutes. Now, how cool is that, right? How cool is that? So, ever since discovering options, I never traded stocks. Again, never traded. Stocks is not that's not where you want to be, right? You want to be the option. You want to anticipate where the stock is going. And I think that's really important. And you know what? And for that reason, that's the beauty of options right there, folks. The leverage that it gives you. All right, so I mentioned earlier that we had discovered some pretty cool strategies. We have the training that works, the trading that works. We know how to make it. And what I'm going to recommend here is that you learn from our mistakes that we had made over the years. Been doing this now over 16 years. We're in our 17th year. Learn from our mistakes. You're not going to live long enough to make them all yourself, right? A smart trader learns from their mistakes, but a wise trader learns from other people's mistakes. We are into options trading, one stock, one strategy, 1 hour a day, SPY, SPY, the S&P 500. I can't think of a better thing to trade. So, all right, just real quick. Okay, no further questions to answer. I'm gonna wrap it up. Don't forget, folks, if you want what I have, you gotta do what I do. Have a great evening, folks. We'll see you hopefully in the trading room. All right, hopefully tomorrow in the trading room, and looking forward to it. Have a good night, folks.
Keep your eyes on the prize. I can tell you what.